Listen up, investors. If you've been feeling the heat from the recent market volatility, you're not alone. The stock market can be a roller coaster, and it's easy to feel overwhelmed by the constant ups and downs. But don't worry, there's a way to navigate these choppy waters. The markets are a wild ride. One moment, stocks are soaring, and the next, they're plummeting. It's a cycle that can leave even the most seasoned investors feeling dizzy. The unpredictability can be daunting, but it's also a natural part of the market's ebb and flow. Up one day, down the next. This kind of volatility can make it challenging to stick to your investment strategy. It's tempting to react impulsively, buying high and selling low, which can be detrimental to your long-term financial goals. Instead, it's crucial to stay calm and focused. It's enough to make your head spin. But remember, market fluctuations are normal. They can be influenced by a myriad of factors, from economic data releases to geopolitical events. The key is to have a strategy that can withstand these ups and downs. You need something reliable, something that can weather the storm. Just like a sturdy ship in rough seas, your investment strategy should be built to handle turbulence. This is where having a diversified portfolio and focusing on quality investments comes into play. That's where SCHD comes in. The Schwab U.S. Dividend Equity ETF, or SCHD, is designed to provide stability and income, even in volatile markets. It's an ETF that focuses on high-quality dividend-paying stocks, offering a blend of growth and income potential. SCHD stands for Schwab Dividend Equity ETF. It's a fund that aims to track the performance of the Dow Jones U.S. Dividend 100 Index, which includes 100 of the highest dividend-yielding U.S. stocks. This focus on dividends can provide a steady stream of income, which can be particularly valuable during market downturns. It's a basket of stocks known for their dividends. These companies have a track record of paying out dividends consistently, which can help cushion the impact of market volatility. By investing in SCHD, you're essentially buying into a diversified portfolio of reliable, income-generating stocks. Dividends are cash payments made to shareholders. They represent a portion of a company's earnings and are typically paid out on a regular basis. For investors, dividends can provide a source of passive income, which can be reinvested or used to meet other financial needs. Think of it as a bonus for holding onto a stock. When you invest in dividend-paying stocks, you're rewarded not just through potential capital appreciation, but also through regular dividend payments. This dual benefit can enhance your overall returns and provide a sense of financial security. SCHD focuses on companies with a history of paying dividends. These are typically well-established firms with strong financials and a commitment to returning value to shareholders. By focusing on these companies, SCHD aims to provide a stable and reliable investment option. These are typically well-established, financially sound companies. They have a proven track record of weathering economic downturns and continuing to pay dividends even during challenging times. This makes them a valuable addition to any investment portfolio. They're the kind of companies you want in your portfolio when the going gets tough. By investing in SCHD, you're positioning yourself to benefit from the stability and income that these high-quality dividend-paying stocks can provide. So, the next time the market takes a wild turn, you'll have the confidence to stay the course, knowing that your investments are built to last. Let's talk numbers, folks. When it comes to investing, understanding the performance of different indices and funds is crucial. It helps you make informed decisions and navigate the often volatile world of the stock market. Today, we're diving into a comparison between SCHD and some of the major indices out there. Year-to-date, the S&P 500 is down almost 2%. This index, which represents 500 of the largest companies listed on stock exchanges in the United States, is often seen as a barometer for the overall market. A decline here can signal broader economic challenges or investor sentiment shifts. The tech-heavy NASDAQ 100, down over 4%. This index includes 100 of the largest non-financial companies listed on the NASDAQ stock market, many of which are in the technology sector. The significant drop here reflects the struggles and volatility within the tech industry, which has been facing various headwinds. But guess what? SCHD is up 3%. That's right, up. In a year where many major indices are struggling, SCHD has managed to buck the trend and deliver positive returns. This is a testament to its robust selection criteria and the strength of the companies it includes. In a market where everything seems to be going down, SCHD is a beacon of hope. Investors are always on the lookout for stability and growth, and SCHD seems to offer a rare combination of both. It's not just about surviving the downturns but thriving in them. It's proof that you don't have to sacrifice returns for stability. SCHD gives you both. This fund is designed to provide a balance of income and growth, making it an attractive option for a wide range of investors. Whether you're looking for steady dividends or capital appreciation, SCHD has something to offer. Remember, past performance is not indicative of future results. Investing always carries risks, and it's important to do your own research and consider your own financial situation and goals before making any investment decisions. Consult with a financial advisor if you're unsure. But SCHD's track record speaks for itself. Over the years, it has consistently delivered strong performance, making it a reliable choice for many investors. Its focus on high-quality, dividend-paying companies has helped it weather various market conditions. It's a fund that's built to last. With a solid foundation and a strategic approach to stock selection, SCHD is well-positioned to continue delivering value to its investors. So, whether you're a seasoned investor or just starting out, SCHD is definitely worth considering for your portfolio. SCHD isn't just about dividends, it's about quality, it's about value, it's about growth. The fund holds companies with strong fundamentals. These are companies with solid earnings, low debt, and a history of growth. They're the kind of companies that can weather any storm. SCHD also has a low expense ratio of just 0.6%. That means you keep more of your hard-earned money. And in today's market, every penny counts. Now let's talk about some recent changes to SCHD. The fund just underwent a reconstitution. That means it added some new companies and removed some old ones. Don't worry, the changes were all part of the plan. The goal is to keep SCHD aligned with its investment strategy, and that means constantly evaluating the portfolio and making adjustments as needed. Section 5. New Additions Energy takes center stage. One of the biggest changes in the reconstitution was the addition of several energy companies. ConocoPhillips in particular stands out. It's now one of the top holdings in SCHD. Why energy? Because energy is essential. People need energy to power their homes, their cars, their businesses. And with the global economy recovering, demand for energy is only going to increase. Section 6. Notable deletions. A focus on sector balance. Of course, when you add new companies, you have to remove some old ones. Some of the notable deletions from SCHD include Pfizer and BlackRock. These are both great companies, but the decision to remove them was based on sector weighting. The fund managers wanted to make sure that no single sector was overrepresented in the portfolio. Section 7. A history of dividends, the power of consistent income. Remember what I said about dividends? They're like a bonus for holding onto a stock, and SCHD is full of companies with a long history of paying dividends. To be included in SCHD, a company must have paid a dividend for at least 10 consecutive years. That's a testament to their financial strength and their commitment to their shareholders. Section 8. Investment Strategy, Balancing Yield and Value. SCHD's investment strategy is simple but effective. It focuses on companies with a high dividend yield and a low valuation. In other words, it looks for companies that are paying out a lot of cash to their shareholders relative to their stock price. This strategy has served SCHD well over the years. It's allowed the fund to outperform the market while also providing investors with a steady stream of income. Section 9. Analyst Outlook and Price Targets, the path ahead. So, what's the future hold for SCHD? Analysts are bullish. They see a lot of potential in this fund, driven by its strong performance and solid fundamentals. The stock market has been showing positive trends, and SCHD is well positioned to take advantage of these movements. Analysts have been closely monitoring the market conditions and the performance of SCHD, and their outlook remains optimistic. They have an average price target of $280 for the fund. This target is based on a comprehensive analysis of the fund's past performance, current market conditions, and future growth prospects. The $280 target represents a significant upside from its current price, indicating that analysts believe there is substantial room for growth. That's a significant upside from its current price. If SCHD reaches this target, it would mean a considerable return on investment for those who hold shares in the fund. Investors are always looking for opportunities to maximize their returns, and SCHD appears to be a promising option. Of course, price targets are just estimates. They are based on a variety of factors including market trends, economic conditions, and the performance of the companies within the fund. While these targets provide a useful benchmark, they are not guarantees. Investors should always consider the inherent risks and uncertainties in the market. There's no guarantee that SCHD will reach that level. The stock market is inherently volatile, and many factors can influence the performance of a fund. Economic downturns, changes in interest rates, and geopolitical events can all impact the market. Investors need to be aware of these risks and make informed decisions. But the fact that analysts are so optimistic is a good sign. Their positive outlook suggests that SCHD has strong potential for growth. It's important to stay informed and keep an eye on market trends. By doing so, investors can make strategic decisions that align with their financial goals. That's SCHD, folks, a fund that's built for stability, income, and growth. Don't miss out. SCHD offers a balanced approach to investing, combining the potential for capital appreciation with the benefits of dividend income. It's a fund designed to weather market fluctuations while providing steady returns. Whether you're a seasoned investor or just starting out, SCHD could be a valuable addition to your portfolio.